Traders, in this video, I'm giving you 4 stocks that I'm looking to for rally into the holiday season. I want to go over a full detail why these stocks I'm looking at to rally. The first one is Disney. Mickey Mouse out here. How do you not love this chart pattern here in Disney? We broke out, okay? What did we do? We based, love that, build demand, broke out again. What did we do down here? We based demand again, broke out here on that Disney Plus. And what are we doing up here? We are basing what I look for, a move higher, 155 plus. Frozen 2 came out, shattering numbers. I mean, how can you bet against Disney? In fact, in a couple weeks, I'm going camping at Fort Wilderness in Disney. Really, it's glamping. It's pretty luxury camping in the cabins over there. Another name I'm looking at is Freeport Mac. Now, this name is sensitive to China. Copper. When there's demand for copper, copper prices go up. And usually when copper rallies, it's a good sign for the economy, especially over in China here. Freeport Mac, another similar chart pattern here. This time, though, it's not near the highs. We base down here at 11, and we're starting to break out higher. I'm just looking for 13, maybe 13 and a half here in FCX. Another thing I want you to look at here is these beat down stocks. So Freeport's an $11 stock. These beat down stocks, what normally will happen is these stocks that are beat down, they'll start to rally into the new year. For example, if you look here at Freeport at the start of 2019, this baby just went vertical higher. So look for Freeport. As long as we continue to have prolonged China news, we don't have really anything crazy going on, or the whole trade war doesn't get completely X'd out, I think you'll have copper rally and your China stocks will continue to rally. So Freeport, if you want a cheap stock there, Freeport is your $11 pick. I think, again, it goes up about nearly $2 or so from the current share price. And then what I'm looking at is, how are you going to pay for all these holiday gifts? Well, your Visa, your MasterCard, okay. Those stocks, though, they've already had, they're big stocks. They've already had a big run. What I want to look at is Square. So Square, the third pick. Why do I like Square? Not only is Dorsey a fantastic CEO, but the stock is not near the high. It's been beat down, and it built demand here around 60 to 65 where buyers have stepped in. And you see now right over 70. It's finally getting into what we call a gap fill. One of my favorite patterns are these gap fills higher. Now, it may be earnings to send the stock back to 80. It may just start trading into the gap and accelerating higher here. But I like that in Square. There's some volume building up in it, and it's getting into that gap fill. Look for Square the upside, and then another one, and you probably have not heard of this, and I don't blame you. It's not a very popular stock, is Bottomline Technologies, ticker symbol EPAY. ePay. Another name I'm looking at, we can actually look, and you can look up what they are. IT name, cloud-based business payment, digital banking. That space there. I like this chart because, again, not near a high, right? It has room to run. Big move on earnings, and look at this continuation here. And again, it doesn't trade millions or millions of shares. ePay, look for this one to trade. I think it starts to trade up to 52, so there's still some upside, and then we get that move up to about 57 to 58 bucks a share here in ePay. So I gave you 4 picks: Disney, Freeport, Square, and ePay, Bottomline Technologies, that I think can rally to the holiday season.